Hey, it's Kevin Unger from Cross Country Mortgage. I wanted to send this presentation to you as a trusted business colleague because I think the information contained in here can be a tangible difference maker in your business. Set you apart from the competition by simply putting more money in the pocket of both the buyer and the seller by doing a purchase cema. So let's give you a quick rundown of what I'm going to talk about. 1. Why does New York have such high closing costs? 2. How Cross Country Mortgage can mitigate this using a purchase cema, consolidation, extension, and modification agreement. 3. How this adds real value to the client experience, and as important, help you land more listings. As you well know, you're the client's trusted real estate advisor, always looking for ways to help them on their path to homeownership. With this knowledge I'm presenting here today, you can advise your clients differently and take advantage of the market in ways that your competition is not. Most sellers and buyers of residential real property in the state of New York are unfortunately burdened with very high closing costs. The main culprits are New York State transfer tax, which is typically paid by the seller, and mortgage recording tax, typically paid by the buyer and the buyer's lender. In New York State, transfer tax to the seller is calculated on the purchase price at a rate of $2 for each $500, which is 0.4%. In New York State, mortgage tax to the buyer is based on a percentage of the mortgage amount at a tax rate that varies by county. Generally speaking, it varies between 1% and 2%. Cross Country Mortgage, and specifically my team, have a solution that reduces those costs and saves the buyer, seller, and the lender money. A document called a Consolidation, Extension, Modification Agreement, better known as a cema, allows you to avoid the majority of the mortgage tax on the new loan. A cema is normally done on a refinance loan, but not many people are aware that they can be done on a purchase. It's important to mention here that it's very rare to obtain a cema on a purchase. Here are the main reasons why. 1. Many banks and loan officers don't even know what a purchase cema is. 2. For those who are aware of them, they are known to be difficult to obtain. And 3. The process of obtaining them is normally left up to the buyer's and seller's attorney, who typically don't know how to do them or have the time to do them as well. So let's let you in on a little secret. We can do them. We know how to do them. We have a relationship with one of the most well-respected and well-known law firms in the country who have perfected the purchase cema. We work exclusively with this law firm on these types of transactions, and they will quarterback the process and make sure it gets done properly. Let's get into some detail on the cema and what it accomplishes for all parties. A cema allows for 1, the seller to pay New York State transfer tax on only the difference between the purchase price and the unpaid principal balance of the seller's existing loan, known as a continuing lien deduction. 2, the buyer to pay New York State mortgage tax on only the difference between the buyer's new loan amount and the unpaid principal balance of the seller's existing loan, known as the gap money. And 3, the buyer's lender to pay New York State mortgage tax on only the gap money. So let's take, for example, a 1, 2, or 3 family house or individual residential condominium unit located in Kings County. The sale price is $800,000. The seller has an unpaid principal balance of $400,000 on their existing loan, and the buyer is financing $500,000. Now you can see from this simple chart what the cost and savings are to buyer, seller, and lender with no cema and with a cema. Let's take a look at no cema first. You can see that the buyer pays $9,625 in just mortgage tax alone as part of their closing costs. $500,000 loan times 1.925% mortgage tax rate in the 5 boroughs. The seller pays transfer tax of $3,200, $800,000 sales price times 0.4%, which is a calculation of the transfer tax fee. The lender pays New York State mortgage tax of $1,000, $400,000 loan amount times 0.25%, which is the calculation of the fee the lender pays. Now let's look at the numbers with a purchase cema. New York State mortgage tax paid by the buyer is only $1,925, which is a savings of 80%. Transfer tax paid by the seller is $1,600, which is a 50% savings. And New York State mortgage tax paid by the lender is $250, which is a 75% savings. In these types of cases, the borrower may choose to share some of the savings with the seller without having to reduce the purchase price. So how do we do this? For a purchase cema to work, the seller's lender would have to be willing to assign the seller's mortgage to the buyer's new lender, and the buyer's new lender would have to allow the buyer to close their new loan as a cema. As mentioned, we work with a law firm that fully vets this information up front, and they will detail for us precisely what the savings are to each party. Then, the seller's existing lender will prepare a document called an assignment of mortgage, and the buyer's new lender will prepare the cema. The assignment and the cema basically tie together the seller's existing mortgage with the buyer's new gap money mortgage. The terms of the seller's existing mortgage and the buyer's new mortgage are then restated in the cema. Again, all of this under the supervision, guidance, and hard work of the bank attorney we work with. As you are well aware, you are your client's most trusted real estate advisor, but now you can become their most trusted financial advisor for this transaction, adding more value to their experience. These are meaningful and cost-saving opportunities for both buyer and seller that you can take credit for, set you apart from the other agents, and get a leg up on the competition. This is an edge to push you over the top, and you'll be utilizing a tool that no one else does. This will no doubt bond you to the client for life. Now, we did go over a lot of information in a very short time, so I hope you caught all of that. If not, feel free to watch it again. I made this recording specifically so that you can do that. Talk soon, and feel free to ask me any